Well, welcome everyone. It's Joe with you here from Maverick. Let's jump into our next candlestick pattern for the day. It's going to be piercing pattern. The piercing pattern is a reversal signal to the upside. It's the opposite of our previous pattern that we discussed, dark cloud cover. Very similar. And I'm going to be honest, folks, I had a hard time identifying these. We'll get to some examples. I'll show you what gave me head fakes. But the first thing we need to do is go through Bulkowski's top down and find out what this thing does and how to read it and what its statistics are. So the theoretical performance is a bullish reversal. It is tested 64% of the time as a bullish reversal. It actually scored pretty high when it comes to what Bulkowski likes to see. 40 out of 103, so above average there on the frequency rank, saying that, hey, you can see these quite often. Now, guys, I went out there and I looked at a bunch. I'll show you some of these head fakes that I saw because sometimes the colors were flip-flopped, things of that nature. But when you do identify them, they are pretty good. So let's get going here on the overall performance. 13 out of 103. So this is getting higher up to the from top 10, right? We're pushing into that level. And I think the majority of it is because it reaches its target 67% of the time in a bull market with an up breakout. That's what it's supposed to do as a bullish reversal. But it has a 6.57% move after 10 days. Now, interesting enough, it's in the wrong direction. Bulkowski takes this into consideration. He says, how frequent does the pattern move? How much does it confirm in its overall expected direction? And then how much does it move past that candlestick pattern? Now, it's interesting because this is also contrarian. We've seen a few of these come up this way, where in this case, 67% of the time it reaches its price target to the upside. It's a bullish reversal signal. However, after 10 days, the majority or the best average move it had in a 10-day period was to the downside of over 6.5%. But this is what gives it its high rank, is it does tend to move, in this case to the downside, but it does move a lot after this pattern is established. I'm going to try to implement this into the markets. We're going to talk about, hey, is there a way that we could find something more consistent in the direction we want it to go versus just blindly look, it's going to confirm 67% of the time the upside, and after 10 days it has a better than average chance of going down 6.5% on average over 100 trades. Well, let's talk about the pattern itself. Now, what made this pattern difficult for me, I'll be honest, is trying to identify where it falls in between the two candlesticks. We first need to establish how this is set up. You'll notice that we've got descending candles. There's a little bit of bear descension. 1, 2, 3, 5 days. Just depends on where it comes from. I think overextension might help with probabilities, but I think that's with all patterns, right? That's what we talk about here with Maverick. The piercing pattern itself is two candlesticks. You guys can see you've got a bearish candlestick and you've got a greenish candlestick or a bull candlestick. The most important part of the piercing pattern combination of the two candles is the open of the green candle has to be below the previous red candle or bearish candle's low. So that was an easy thing for me to find. What the hard part was to find a candle that closed in between half of the body, and I'll just draw another arrow here, of the red candle. So if this is the complete range from open to close of the red candle, this green candle's close needs to be somewhere between this box I drew, halfway, and the red candle's open. That's where it got a little bit weird, and I actually found myself drawing on top of the charts to see how close I got. Some were closer than others. Some were just way off. Sometimes I had these candlesticks flipped. You start to go colorblind, folks, when you look at these enough. So pay attention to them, because when I did find the examples, and we'll see them here in a second, they actually did pretty decent. So let's review. We need to see the open of the green candle be below the red candle's low, and we want to see the close of the green candle be somewhere between, I'll just highlight the box that I drew, midpoint of the red body and the open of the red body. Right? That's a lot to swallow, but that's what Bulkowski's looking for, and that's what this pattern is. This is a little easier to identify if it is at the bottom of an extension. So a down move, 3, 4, 5 candles, they're easier to see when they create a pivot point, like in this example here. Now the confirmation is a candle to the upside that needs to close above the high of the pattern. Now folks, remember, what is the pattern? The pattern is both of these candles. This would be the high of this pattern, right? Not this. This would be the high of this pattern. As long as we get a close above the high of the pattern itself, we got ourselves a confirmation. Now, whether or not we wait for the confirmation, like I like to personally, or we just wait for the pattern to develop and then do the Bulkowski and count 10 days past it and see if it confirms at all, I like to put my best foot forward and wait for my confirmation candle before I even place trades. Just increases my probabilities. So let's review this real quick, and then we're going to go out and take a look at our example. So the best setup conditions in this is a downtrending chart, or I should say a down moving chart. Our first example is going to actually be in a sideways to slightly upward moving pattern. It's the down move that I'm looking for before I want to see this, this pattern develop. After a bearish extension, the more the extension, I found that there were more often you could find them. They were a little bit easier to identify. The one example we had was after 1 or 2 days, which I had to stare out a long time. But when you get some of these extended patterns, it does get easier and easier to identify. Confirming above the pattern's high. Remember, not just the previous day's high, the green candle's high, but both candles combined, whatever that high is. And then mid-level frequency with higher performance. The consistency of this triggering, remember, reaching its target, Bulkowski always says you take the full pattern, whether it's 1 candle or 2, and then you add it to itself to the upside or subtract itself from the downside, and that's its target. These reach their target quite often, right? Over 60%, 67% of the time. The higher performance, what Bulkowski is chasing, is an inverse or a drop of 6.5%, over 6.5%. So they do move. Now, what you and I got to figure out is how long we want this confirmation to go. We got to target it, and we got to find out where it lies on the overall chart itself, along with our approach and our outlook on the markets. So let's jump straight out to our first example. I've got a chart here. I'm just going to go ahead and start moving it forward. Now, this is the chart that I told you guys I had in more of an uptrend. I'm going to get going here and establish this pattern. So you see we're moving higher, but then I saw it pull back, and I think that's it right here. Now this is tight, and remember folks, I had a hard time finding some of these, but this is the pattern that I'm looking for right there. Now you notice there's no downtrend. It's not falling apart, but it is indeed a piercing line pattern. Now I thought it'd be interesting just to follow along with this to see if it's going to indeed turn around and continue way high, or if it's just going to flatline and maybe just be a pattern that we throw out. So I thought it was pretty interesting. Okay, so let's move it along. 10 days, right? And we'll see where we end up. So in this case, it actually did confirm, but it didn't confirm for a couple of days. I'll show you what I'm talking about. So first of all, let me box the pattern. Here is our pattern once again, and the confirmation is going to have to be above that high right here. Right? So we did not get it the next day. I do think that Bulkowski says, hey, you want the confirmation to be pretty quick. If you were patient enough to wait for it, it did gap and confirm there. Then you could see if this was indeed your entry point, we carried across. It's a little slope lower here. You would have come out pretty decent over the 10 days. I'm not sure if that's quite 6% or if it struggled to get there, but it worked. Right? Kind of out of context, but I just wanted to show you that they happen often. But what I struggled with, and hey, since we're here, guys, I'm just going to go ahead and have some fun with you. This is where it gets tough. This is not one. This is not one. In fact, this is a bullish engulfing pattern. Here's one that might head fake you. This stuff right here kind of threw me off. You could see in this situation, the green candle did not close below the red candle's low, and it closed well above the the red candle's open. Wow. So you're kind of you kind of go candle blind. So take your time with these. They're pretty cool. All right, let's move on to our next couple of examples. We're a little bit more specific to down move and confirmation to the upside. So moving over to our next example, I'm going to start this forward. You're going to find this is a little bit more of a move to the downside where this develops. So we've got a big bullish move to the upside here. We're consolidating, and then this just starts to drop. What I like about this is the extension that I'm looking for. A pretty good drop, a pullback, some sort of an area that it might pivot based on support resistance levels. There it is, guys, right there. Let's go ahead and highlight it so you guys can focus on it. And this one's actually pretty cool because it's big. Now, what's tough about this, and I thought was pretty difficult about it is, so let's zoom in on this one a little bit more. I like this because it was a little easier for me to identify, but take a look at the shadow on that red candle here. It's way up there, so the confirmation on this is going to be difficult. So first off, folks, since this is one of the ones I struggled with, let's break it down. Here is the low of the red candle, and you can see that we did open below that. And here's about the midway point to the red candle, and here's its open. And yes, we are right in between these lines. So we have ourselves a piercing line. So now confirmation is going to be super difficult because it's got to go pretty high to the upside. I wonder if these fail, I'd imagine it would be something below the low of the pattern. So we'll just keep an eye on those 2 points as we go ahead and just bounce out 10 days. Okay, pretty volatile, pretty big move. What's neat about a piercing line, they act a lot like the inverse of the dark cloud cover. It's usually a consolidation point. It's usually a pretty good turnaround, so I would expect a lot of volatility in a scenario like this. So we didn't get the confirmation until a few days later. This is the high here. Let me get my pin to make sure I get this straight. So here is our confirmation line right across there, and you can see it took a few days. That's day 1, and that's day 2 from the pattern development, right? This is the pattern here, these 2 days previous, these arrows. So we did get the confirmation. So if this was kind of our entry point, you can see that if I carry this straight across, that we probably, well, we did do okay, but it came right back down over that 10 days. Now that initial surge was pretty big, and then you can get into some of the things we talk about at Maverick. I don't want to overteach the pattern, but this would be a target or a possible target to the short term to the upside. You can see that over 10 days, it really didn't fare well or fare too well. And big part of it is this huge line. So we had to wait for the confirmation. It'd be nice to confirm it somewhere back in this area, but you notice that it gapped up regardless. But hey, that's 2 that we've had, and they've both worked out pretty decent. Not ideal, but I can see where he's getting that 67% amount. Let's move on to our next example. So on this next example, I decided to go full on downtrend, down move, and see what really happened, and see if I can put my best foot forward. So let's see where we end up on this one. So here we go. We're on our way. A little bit of a pullback there. We're moving lower. We broke support level. This is kind of where I like it. And take a look at that piercing line. I did like this one quite a bit because it was pretty much the most obvious, and it's kind of the one that I was looking for. Let me box it out for us. You can see it's a pretty big one. It dropped. The green candle is a lot larger than the red candle in a previous example, but take a look at that. The high is not too high, and it doesn't seem like we're going to have to climb too big of an area to have this thing confirmed. So let's draw our lines here. Did we open below the low of this candle? Absolutely, very easily. And did we finish between halfway and between halfway and all the way to the top of the red candle? And the answer is yes. So there is our candlestick pattern. Now confirmation is going to be at the top of that box. So let me go ahead and erase these lines and get a fresh one up there for us. Right here. So keep your eye on that. We'll go over the 10 days, and then what we'll do is talk about what we could have done over the first 2, 3, 4, so on and so forth. So let's get going here. There's our 10 days. Interesting. So this really didn't gain or lose any traction at all. In fact, over the 10 days, it did confirm, didn't it? It confirmed the next day, which I believe is what we're looking for. So if this is our pattern, just box this in for you guys, that was definitely our confirmation. But you could see after 10 days, it just kind of rolled over and took a little bit of a hiccup here. Just didn't do much. Kind of fizzled out. So if this becomes the range of the overall pattern, you can see it really didn't exceed it in either direction. It looked like it was about to, but it didn't follow suit. It looked like it wanted to roll over. So in this situation, you might want to consider more things than just the pattern itself. I would like to see the piercing line do something a little bit more aggressive, maybe get back up to resistance area. But you can see in this case, it just didn't seem to do so. So maybe a little bit more confirmation is needed. It just depends on how you want to implement this into your trading style and your trading plan. All right, guys, let's do a brief summary. So the pattern frequency is 40. It's slightly above average out of the 103 that he measures together. The pattern rate is also higher at 13 out of 103. It's pushing more into the top 10, obviously the top 15, but it's a 6.5% move to the downside on a pattern that's supposed to be a bullish reversal. So maybe we need to raise a radar to make sure that we don't let these things go over that 10-day period. If you're expecting some sort of a capitulation move to the downside, then yeah, it might be short-lived, but it could move pretty aggressive for you. Tested performance is 64% of the time is a bullish reversal. And we saw that. Most of these did confirm. The last one we looked at confirmed the next day. The first two actually took a few days to confirm. Look for extensions to the downside. I like to say bull market, bear market, downtrend, uptrend, but in this situation, we found a couple, or I found a few, that weren't necessarily in downtrends. I'm just looking for an extension to the downside. It'd be probably a little bit better to find something more volatile, something more aggressive, like a faster drop, larger candles. Give it a little bit more probability of that turnaround. There's my 2 cents. All right, guys. Appreciate it so much. We'll see you on the next pattern.